Solved problems. Find out changes in equity when figures are missing. Problem. Mr. J started his photo studio business on January 2020 with a cash capital of 150,000. Assets and liabilities. Cash 60,000 debit. Accounts receivable not given. Car not given. Equipment not given. Accounts payable 100,000 credit. Notes payable not available. J's capital not available. Determine the missing figures based on the following information and give the total assets, total liabilities and owner's equity. Financial records show that the business has 10,000 receivable from customers. The car costs a friend 360,000 but J got it from him only for 1/3 of its cost. Mr. J signed a note payable to the bank 500,000 which he used to buy the car and equipment. Only half of the note in number 3 is outstanding. 2. How much was the change in the capital of Mr. J? What caused the change in capital? Explain the movements in the equity account. Solution. Problem given. Cash closing balance is 60,000 on the asset side. Accounts receivable not available. Car value not available. Equipment value not available. Accounts payable 100,000 on the liability side. Notes payable not available and capital not available. Capital account adjusted to make the financial equation agree. On the liability side, capital accounts payable minus 100,000, cash balance 60,000, capital minus 40,000, total assets 60,000, total liabilities including capital is 60,000. Mr. J started his photo studio business on January 2020 with a capital of 150,000, cash debit 150,000, capital and capital credit 150,000, total cash 210,000, total capital 110,000 and accounts payable 100,000, total liabilities 210,000. Financial records show that the business has 10,000 recoverable from customers. Accounts receivable capital 10,000. On the capital liability side, accounts receivable 10,000. Total assets 210,000. Cash 10,000. Accounts receivable. Total assets 220,000. Total accounts payable 100,000 and capital 120,000. Total liabilities including capital 220,000. Total assets 220,000. J signed a note payable to the bank for 500,000. On the cash, notes payable 500,000. On the liability side, notes payable, cash 500,000. Total assets 720,000. Total liabilities including capital 720,000. The car cost a friend 360,000 but J got it from him for only 1/3 of its cost. J used the amount from the notes payable to buy the car and equipment. So on the asset side, cash credit 120,000, cash credit 380,000 and car debit 120,000, cash equipment debit 380,000, total assets 720,000, total liabilities including capital 720,000. Only half of the note in number 3 is outstanding. That means notes payable 500 has been paid off half of its amount. So in the cash credit 250,000, notes payable debit 250,000. So total assets 470,000, total liabilities including capital 470,000. Additional capital brought by Mr. J into the business to maintain the closing cash balance as given. Capital to restore the closing balance, additional capital brought by him is 100,000. Capital add 100,000. Total capital 220,000. Total assets 570,000. Total liabilities including capital is 570,000. Solution. Assets. Cash closing balance 60,000. Accounts receivable 10,000. Car 120,000. equipment 380,000, total assets 570,000. On the liability side, accounts payable 100,000, notes payable 250,000, J capital 220,000, total liabilities and J's capital 570,000. Change in capital of Mr. J and the causes for the change in the capital are: amount, initial capital 150,000. Mr. J started his photo studio business on January 2020 with the cash. Additional capital 100,000. Additional capital brought by Mr. J into the business. Adjustment of cash balance. Closing cash balance is 60,000. Adjustment for accounts receivable. Accounts receivable balance is 10,000. Adjustment of accounts payable minus 100,000. Total capital of Mr. J 220,000. Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.